Hi, thanks for visiting my channel. For anyone new to this channel, my name is Tanveer Chaudhary. I'm a certified financial planner and real estate investor. I make educational videos regarding wealth building, financial planning, and real estate investing. I post regularly and I make one new video every week. You can visit my channel and find videos about different financial planning and real estate investing topics. Today I wanted to talk about 3 biggest mistakes people usually make with their TFSA account. Let's first discuss what is TFSA and how it works. Tax-free saving account was introduced by Canadian government in 2009, where you contribute money into a registered plan with after-tax dollars. Money grows tax-free within the plan, and when you withdraw money from this plan, there is no tax payable. It does not affect your government benefit, and when you pass away, it passes on to your beneficiaries tax-free. If you never contributed to tax-free saving account since it was introduced in 2009, your contribution limit as of January 1st, 2023 would be $88,000, since any unused TFSA contribution room carries forward indefinitely similar to RRSP, but any withdrawal made from the tax-free saving account frees up the contribution room, unlike RRSP. Before we start talking about the 3 biggest mistakes people make with their TFSA account, if you think you learn at least one new thing from this video, all I ask is to like this video and subscribe to this channel so it encourages me to produce more valuable contents for people like you. First TFSA mistake you must avoid: to designate your spouse as a beneficiary of your TFSA account. If you intend to leave your TFSA account to your spouse after you die, it's always better to name the spouse as a successor holder as opposed to designating as a beneficiary of your TFSA account. Only a spouse or common law partner can be designated as a successor holder of your TFSA account, which means they will effectively become the new owner of your TFSA account after you pass away. Your spouse can roll over the proceeds of your TFSA tax-free into their personal TFSA account, and they don't need extra TFSA contribution room. But if you designate your spouse as a beneficiary of your TFSA account, he or she can still roll over the proceeds of your TFSA tax-free into her personal TFSA account, but they will need the extra TFSA contribution room. Beneficiary designation is best used to distribute a TFSA to beneficiaries other than your spouse, such as children, grandchildren, or charitable organizations. Second TFSA mistake you must avoid is overcontribution. TFSA overcontribution usually happens when you make TFSA withdrawals and TFSA contributions in the same calendar year. Since any TFSA withdrawals in the current year doesn't free up the TFSA contribution room until the next calendar year. Let me give you an example. Let's say you withdraw $10,000 from your TFSA account in year 2023. It does not free up the contribution room until January 1st, 2024. If you overcontribute to your TFSA, the CRA will charge penalty on the excess contribution, which is 1% per month or 12% per year until the excess funds are withdrawn from your TFSA account. Unlike RRSP account, there is no $2,000 overcontribution buffer for tax-free saving account. You can confirm your tax-free saving account contribution limit by accessing My Account information on CRA website. Depending on the timing of TFSA withdrawals and contributions, CRA records might not be 100% reliable to find out your current contribution limit. For this reason, you should keep track of your personal TFSA withdrawals and contribution records yourself. Another thing to keep in mind, even though you're allowed to open unlimited number of TFSA accounts, you should reduce the number of TFSA accounts you have at different financial institutions to keep track of all the withdrawals and contributions you might have made at the different institutions to avoid accidentally over-contributing to your TFSA account. Third TFSA mistake you must avoid is frequent trading and holding speculative investments within your TFSA account. Like self-directed RRSPs, you can open up a self-directed tax-free saving account to manage your own portfolio. Tax-free saving account is designed to be a personal tax-free saving account. It is not designed to be a corporate tax-free saving account where you can make investments to earn business income like day trading of stocks. There is no clear guideline from CRA as to what's considered frequent trading, but if CRA thinks you are running an active trading business within your TFSA account, they could deem any gains you might have made within your TFSA account as business income, which is 100% taxable, as opposed to a tax-free saving account gains, which are completely tax-free. You should also avoid holding speculative investments within your TFSA account. Since TFSA is a registered plan, same as RRSP account, you cannot report any capital losses or gains for tax purposes. In fact, if your investments within your TFSA drop in value and you sell it, you'll lose TFSA contribution room forever. And if your investments within TFSA appreciates in value and you sell them, you'll gain TFSA contribution room forever. Let me give you an example. Let's say you purchase a stock for $10,000 within your TFSA account and it drops in value to $5,000 and you sell it. Not only you have lost the $5,000 TFSA contribution room, you also cannot report the capital loss or apply against any capital gains you might have, since any capital losses or gains within a registered account like tax-free saving account are not reported to CRA for tax purposes. Therefore, you should always hold speculative or volatile investments within your non-registered cash account so you can report any capital losses and apply against any capital gains you might have for tax purposes. That's all for this video. If you think information like this can benefit someone, please share this video. Also like, comment below, and consider subscribing. Thanks for watching and see you in the next video.